Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone midday here, making 1100 UTC. A big shout out to everybody that's making the stream live today and everybody that also is going to watch this on recording. So we're going to stick with our theme. We're going to focus on some requests today. We're going to look more heavily at alts. Okay, and I really kind of want to touch a lot closer on kind of ranges today. So I know it's not something I cover tons and tons on the channel. I try and keep the kind of information, the content quite basic, looking at key kind of internal range liquidities, external range liquidities. But I think sometimes it can kind of be better grasped if we look at kind of where we derive our ranges from. So it's all well and good me saying, look, we're reacting at this key level, etc. But sometimes to give it that extra bit of context, we want to kind of look at our ranges. So I thought, while we let a few people kind of join in, I changed the stream on Monday to an hour later. So obviously really been keeping people guessing the last few weeks. So give people a little bit of a chance to come in. Again, please do ask questions. We've got Craig Love on the stream today. It's brilliant to have you here, buddy. I know you've had to miss quite a few because of work commitments. And he's loaded us up already with a good suggestion with CRV. Whack. Hello, my friend. How you doing? So let me just make a note of these, because as the chat starts to fill up, then I do have a tendency to forget. If anybody does want any looked at, do please pop them in the chat. And if I overlook it, then please accept my apology. It'll only be a mistake. Just let me know again and we'll move forward. So I wanted to cover ranges today. Now, I know I cover kind of inside bar ranges with you guys quite a lot. So we're going to take a look at that on BTC. Yeah, so let me just make a note of that. BTC inside bar range. Yeah, we can see how that's been playing out. I've got this range here on ETH, and I want to just cover kind of different ways that you can draw these ranges, okay? Because I know it's something that a lot of people have difficulty with, right? So you can draw ranges by a line of best fit. So, for example, this range that I've got here on ETH, when we set this midline here, my range high was actually a little bit higher. So this one here, right, was actually a little bit higher. Now, there's absolutely nothing wrong with that, but for me, it really wasn't that clean. Now, it's very clean here in terms of these midline touches, and I'm not even that concerned that price didn't eventually come back to this, because ultimately, when we look at this origin of the breakout here, we can see the order block, right, that's been suppressing price. So all of that will play into our theory whenever we're trading a range anyway. But the simple principle of range trading is that when we set the range, now for me, I'm slightly different. A lot of people you will read that they want 3 touches on a range. Yeah, so you would have, for example, once we had this one here, then we would require a third one down here before playing that out. Not to kind of say that that isn't the case or that that shouldn't be the case, right? But what I'm saying in regards to that is that it doesn't have to be, right? What you want to do is you want to find what speaks to you, something that you can find very easily on the chart and something that's repeatable. A lot of traders, myself included in this, I spent so much time on the charts over the years. Sometimes you end up taking things for granted in terms of how you see them. And with that, you don't want to be complacent in when you're teaching other people or when you're sharing your methodologies with other people. So for me, when we interacted with this midline, that's what I'm looking for. And let me do that a little bit clearer. So we've got here to here sets the range. This would be like a dealing range, right? So we've taken liquidity over here, run liquidity above the highs here. And ultimately what sets it for me is then when we're breaking down in market structure, right? And this here is then what I consider the kind of check-in of the range, because we've set the range low, we've set the range high, and we've interacted here at the midline, okay? So from here, then I'm looking to trade. I can then add something like the monthly open, yeah, which we can see back here for June. And now the premise around a monthly open really is that we're pretty much bullish above it and bearish below it. So we come up into it here, we get our deviation, we can trade that back down on the lower time frames to where? To the resting liquidity. Once we get above it, we can see, if I zoom in a little bit, we get this nice strong close above. Yeah, we can wait to reclaim it, as we do here. We set this high, price comes back down, then we close above this, we come back down, deviate below that, and then ultimately we're trading this up into the order block over here, all right, that we discussed. And we'll kind of pop that out a little bit in a moment as well. Let me just get rid of that. For some reason, There we go. It's not liking the drawing tool today, so I think we'll move away from that one. Let me just clear this up a little bit. Okay, so I'm a trader that likes to trade with confirmation, right? The other way that you can trade is you can trade based on invalidation, okay, meaning that when you come to a level like this, yeah, and you interact with that level, you run that level there, you've got your swing fail here, meaning that you've taken out below that low. Learning, hey bud, welcome to the stream. You've taken out that low, you expand higher, right? Then what you're saying is your invalidation is below this low. Yeah. So if you're wrong, then you're wrong below that low. And what you would be looking for in that scenario, let's see if it works better with this, is if that's our invalidation point here, and price does break down and come back below that, you're then looking for that to be retested. Yeah, this line here, for your little bit of extra confirmation that price is ready to hold below it, because we're looking at this in terms of market structure. Okay. Now, something I just wanted to touch upon while we're on this, just looking at the range before we move over to BTC, and we'll take a look at the inside bar range that we've been discussing and sharing recently. I put a post out this morning when we were kind of below here, explaining that I think we kind of come down into this range mid now. What a range does is it captures where price is trading, yeah, so where price is compressing, and what that allows us to do is price can stay within this range as long as it wants, yeah. We don't know how long price is going to stay in here, yeah. Range low to range high to mid to high. We lose range low, come back down, ultimately recover it here and push up. Now, something that I would be doing here with this range, yeah, is splitting these into mids. Okay, so what we can see here is how we can tell the story of where price is taking liquidity, reversing, taking liquidity, and progressing. Yeah. So when we've got our mid here as an example, what we don't want to see is price really starting to close below this. Now, ultimately, this big move down here didn't really give us much opportunity to get in, but what did? Right. So we've now lost this range here. Right. So from this low to this high is one range. All right. And then from this low to this high is another range, okay? Split by these midlines, but ultimately we're in one master range, yeah? So how do we play it? Just because we run the highs over here, yeah, and then people are just dumping all the way down, right? We don't just expect that because we run highs over here that we're going to go straight down to here. Our premise is always that if we run a range high, that we're then looking for liquidity below the range low via the midline. All right, learning. You have decent following on Twitter. Why people are not interested in free knowledge? True. Thank you. Learning is not always the case. Also, as well. Look, I'm not telling you guys to follow what I'm saying. Just kind of sharing with you what I've kind of. How I trade and how I've done it over the years. I'm a full-time trader. I've had the pleasure of being one for quite a few years now. So it just it's data, right? A lot of people have different ways and different opinions of how to kind of express that on the market. What I would just suggest to anyone is when you're looking to kind of build yourself in trading is find a style and a system that really speaks to you. Find the experts in that. For range trading, for example, I'd be going to people like SC. I'd be going to people like Trader Dank. Also other legends, on a higher time frame kind of level. If I was looking to trend trade, I'd be following CryptoBird, right? Probably one of the best I've ever come across. Swing traders, people like Bast, etc. System builders, people like Pedma7. Because the truth is, it's all well and good watching like loads of different streams, but you'll just kind of end up trying to do a little bit of everything. Yeah. So the great thing about price action, the great thing about ranges is we can extrapolate this data on daily, weekly, monthly, 1 minute, 5 minute, etc. Right? It's about just having that triple screen system where we appreciate our high time frame bias and we break it down into low time frame trades. Lord Tang, like a ravenous shark, my brother, very good friend of mine here, Lord Tang. I once gave him an example of how price is like a ravenous shark, and he recorded the session we were having and turned it into a really cool little 90s style club mix, which was just awesome. Good to have you on the stream, buddy. So before I digress, has anybody got questions about ranges or how we would look to set a range or different types of ranges? Because while you maybe think about that, let me show you a different type of range, right? One from BTC. give it a few minutes while that loads up. TradingView has been struggling a little bit of late, although I've probably got so much data on these things now. I really should look to clean this up. Right, so here we are. Let me just get rid of this. And then where's our range that we want to look at? No. Where have we hidden that? Well, you know what? Doesn't matter, because it gives us a good opportunity. Here it is. I was going to say we can obviously just make a new one. In fact, I think that's an absolutely epically old range. So let's hide these. And then let's do this from scratch. All right, guys? So it's really, really a very good habit to make sure that you're doing a really solid top down, right, on any asset. Sorry, just a couple of quick questions before I go into this. Hey, mate, how long did it take you to become consistently profitable from trading? Really, really good question. So I came from a business background. I had a couple. I was fortunate enough to build a couple of successful businesses, which gave me a bit of a platform for some passive income while I kind of went through my education, if you like. Now, I approached it incredibly seriously, not suggesting that you guys don't, but for me, I decided that really if I was doing something, a career that I was building that I wanted to learn in, what would be my ideal scenario? And that would be educating myself for at least 8 hours a day, right? 5 to 6 days a week. So what that meant for me was that I was fortunate to have the opportunity that I could step away from my business. I brought a management team in. I sold shares in another company that I had, and it freed me up the time to basically really focus my learning down as hard as I could, right? So in terms of that, you can become a profitable trader pretty quickly. What I would suggest to anyone is really take the time to learn and understand what type of trading speaks to you, what kind of systems that you want to build. Then you need to study that information like an absolute obsessive, right? You want a broad but shallow knowledge of trading, yeah? So understanding your high time frame, your low time frame, medium time frame, etc., ranges, trends, right? Order blocks, gaps, etc. But what you need to do is you need to piece together a system that you can test over time, right? So let me give you an example of something. One of the things that really blew my mind when I first came into trading was the swing failure pattern, right? So for those of you who don't know, when you've got a higher, actually, let me do this with the thing because the pen is being a bit of a dick today. Here we go. So we've got a higher here, right? Now, this is the high that's set. Doesn't matter if it's on a weekly, it can be on an hourly, etc., right? So when you've got this high, you come down, you're looking for a shift in structure, which is taking out this low, right? Yes, micro low. You might say it's small. Why does that count as a low? Because it's flanked by two higher lows, right? So this is where we shift market structure. Ultimately, this is where we break market structure, yeah? We're coming down for here, look. Higher high, higher low, higher high, yeah? Lower high, higher low, higher high. The break of that, right, you're then looking, because you come down, you set this low, then you set the lower high, the break of that low, or even this low here, is where you get your actual market structure break. So all of a sudden, this area here, you're looking for short trades. Where to? The clear and obvious liquidity, right, which for me was resting down here. So what you're then saying to yourself is, okay, if this is where we believe price is running to, we offload or we adjust our position down here. Ultimately, we're looking for one of two things: this level to be recovered, yeah? So price breaks down, then we set this high. I want to see price get back above that high, right? So say we didn't get that drop, we got above this high, we start building bullish market structure. That's when I'm looking for more upside into the closest target, which is our clean liquidity here, right? Possibly an order block in there that drove price down lower. Ultimately, we didn't get that, right? What we got was the opposite. Oh, I've got to keep hitting bloody spacebar on this thing. Bear with me, guys. Probably take about another 30 seconds. So, look, if you're looking for a breakout and you're looking for a breakdown, then I personally want to see confirmation for that, right? So if I'm looking for that, like we said about the idea for breaking up here, Well, now all of a sudden we can see a clear breakdown here, right? So price breaks down, ultimately sets this low. Yeah. So let's draw that in as well. Now what we're saying is as price sets this low, we haven't run this low at this point. So there was liquidity resting there. As price pulls back, we're looking for an area. Bearing in mind we have a bearish bias, we're setting lower lows, lower highs. We then want to look for points of interest that that we can look for short setups, and that comes in the form of this fair value gap here. All right. So when we've got a simple system like that, and we've overlaid this on a weekly chart, so let's go to an extreme at the other end of the market, yeah, and let's do it on a 5-minute chart. Right, and now we're going to see that on a 5-minute chart, we're looking for exactly the same thing, or I'm looking for exactly the same thing, right? So remember, as we discussed, we have this swing failure, meaning that this swing high takes out this swing high, but does not continue. We don't get a close above it. We don't get continuation. Ultimately, price gets rejected here. We see this nice pin bar candle, yeah, with this body and this long tail showing us that sellers are stepping in, the pressure's coming on, right? We shift our market structure here. Do we recover this? No. Where's our confirmation here? Remember, like we said, we want to see a clean lows set, which is here. Yeah. Price ultimately comes down, sets this low. Now, if price wants to come back and get back in ultimately this, which is ultimately a range, most things are ranges when we zoom out. If we came back and we held this, then we look to push up to liquidity above this high, right? However, we don't. We can see the weakness. And what happens? We get this close below, yeah? Ultimately, on that close, we can then start looking for short positions. Where are we looking to take those short positions into? The resting liquidity, yeah? So you've got resting liquidity under here, yeah? So here. You've got resting liquidity here as well, right? And then ultimately, you've got this inefficiency here. And look at this consolidation here before this pump. So if we were to take the order block in here, do that blue. So we've got that as our OB. That's where price comes into. This is where we can start selling off some of our position. This is where we can start looking for reactions. And on the lower time frame, we start to build a bullish structure here. Well, where can we trade it back into? Ultimately, in this move down, yeah, where's our resting liquidity? This is the swing high, right? So then when we come back up into this, no need for us to just blindly hold a bullish bias, right? We can see we're rejecting here. Price is breaking down, okay? Let's overlay the same principles again. If this is our deviation, yeah, this is our swing fail. Where's the swing low? Yeah, here. Ultimately, we come up high, low, higher, high, lower, low, retested this level. Do we hold below? Yes, we do. What's our point of interest for hunting out our shorts? Remember, exactly the same as we were looking at on the weekly, which we'll zoom back out to in a second, the fair value gap, right? So that's on a 5-minute. Now, if we just pop off of this and we go back to our weekly, yeah, see how it's not really any different here. Even in here, right, when we got the confirmation of this breakdown, we still haven't taken out the resting liquidity here, right? So we get a small fair value gap here. What does price do? If we zoom in, nibbles its way back into here. We then look at this on the lower time frame, which I'll show you on here. Hourly is probably a little bit too low from a weekly perspective, but it will give you an idea. So what happens? First interaction with it here. And this is on an hourly as well, guys. Notice how I'm just selecting a lot of different time frames here. It's just to show that you can overlay these principles. It's just much more of the case of finding the time frame that you want to trade it on, right? And then finding that triple screen system. You look at the way that I used a weekly to a daily to an hourly. Probably not the best example, but a weekly to say a daily down to a 4-hour would be a kind of triple screen type system, meaning you've got your high time frame bias on your on your weekly. You're then moving to your daily for your refinements on that. You're triggering down and targeting your levels. And then ultimately you're looking to execute on your 4-hour or on a lower time frame like an hourly here, right? But principles are the same, right? Interacting with a higher time frame point of interest. We see prices coming up here. We've got our high time frame bearish bias. So there's no panic here, right? All we're saying to ourselves is, right, we're bearish. We're looking for bearish trades, but we're going to be patient. We need it to be interacting with a level where we think it can get rejected. What's our confirmation that it is getting rejected? We take out this high, drive into our point of interest. Ultimately, what do we then do? We come up, set this high, set this low here, right? What do? Close below this low here. So we say to ourselves, all right, if we're employing our fair value gap principle, remember, as we said before, we can look for this fair value gap here, right? See if we get a retrace. We don't on this occasion. Or on the close below in the retest of this, you can also look to go short, right? Now, ultimately, this goes short. We don't come down into these order blocks, which would have been a good place to look for. We would have been aware, however, of this fair value gap, because if price is going to regain bullish momentum, then we want to see a recovery within our point of interest. We have our hourly fair value gap. What does price do? We get our swing failure, our break of structure. This one's really beautiful because this is a textbook trade for me, certainly how I like to trade. I like to see a big impulse move higher, leaving displacement, right? Meaning that we leave a fair value gap here. And then I'm looking to be a buyer into the fair value gap. I'm wrong below the swing low, or ultimately at the origin here, which is the internal swing low, before we get the expansive move higher, all right? But all the time, I'm still not expecting this to go crazy. Where would I expect this to go higher? Well, first of all, when we break a higher time frame market structure, yeah, and we get ourselves back and we're into a bullish mode, or if we reclaim this, because this is the area we expect to get rejected from. If we reclaim this, we retest this, and then push up higher. That's an area we could then look to flip from resistance to support. All right. So let me just have a look at some questions. So sorry, Shanu, just to answer your question, it took me about a year to be consistently profitable of trading very, very much full time. I probably studied the markets on and off, and not very consistently for probably about a year and a half before that. Now, the kind of caveat to that question is becoming consistently profitable, which I was, but it still took me quite a bit of time beyond that to really kind of not master, because I don't think you ever really master it, but to control yourself from the psychology perspective, right? Meaning that it's one thing to kind of build a profitable system and then kind of have that system returning constant profits. But was I doing it very well? Not really. I was closing trades too early. I was allowing myself to get too nervous because I was always worried I'd see the trade go in my direction. Then it started to pull back and I'd think like, oh God, if I just close it out here, some money's better than no money. I wasn't really making a great allowance for my fees and bits and pieces like that, which meant that I was then overall my P&L at the end of every month was a lot lower than it could have been. And what that didn't protect me from is that then didn't protect me from the bad weeks, the bad days, the bad months when your system doesn't work for you, right? It works against you. Price is constantly evolving. Trader SZ says it, and one of many great statements that he says, when your system's just nailing it, that's when you put your foot on your gas. You know, you should never overtrade. But if your system's really triggering and you're really in that kind of streak and the market's really speaking to you, that's when you want to put your pedal to the metal, right? When you feel like you're in those kind of wandering or kind of loose moments, and that the key for that is stepping back, checking your triggers, making sure you're hitting all of your trades and all of your criteria properly, and then trading less, right? It kind of forces you to evaluate things a little bit differently. So I hope that's been helpful, Shinu. But what I would always suggest to anyone, like I say, is find a system that suits you. Find some really good traders, a good trading community that back that system up. Immerse yourself in it, ask lots of questions, work very hard, and data is king in trading, right? Back test. Craig, after something like yesterday, how long do you wait for a range to form? Yeah, really good question. Actually, what we'll draw on that, Craig, is I'll teach you about ranges after a drop. So what I would call like an impulse range. All right. Let's cover that because that's, your impulse range or inside bar range, which we'll look at as well in a moment. This is a really, really good question. Learning, most important thing in trading is patience. Yeah, patience in trading is really, really important. I believe sort of your NLP coach did a thread on this recently, so did Trading Tank. Something like that, patience a lot of that comes from being able to have a lot of trust in your system as well. If you've got data that backs up years and years and years, you hit your losing streak, all of a sudden it's very, very difficult to kind of not be a little bit impetuous. And how you draw on that confidence is you look back on your trading system, you look at its performance over time, and you realize that you do have these patches, right? You have these patches when you're not profitable, and you have these down drawdown periods. And it's all about managing the risk on those, right? And managing the damage limitation, which I learned the hard way. Yeah, I think sometimes, I know this sounds silly, but sometimes it's a really good way to learn. Another thing that really helped me was, doing a lot of live trading, right? Now, don't rush yourself into it, but say you've got $500, right, in your trading account, cut that down to 50 and just do some real micro trading, because when you're doing these things live, it's all well and good to look back at charts like this and do post analysis and that, and everyone can sound really clever, myself included. Doing it live is really where the crux of this comes in, right? That's where you're really, really going to test yourself. But just don't do it to a point that you cause yourself any unnecessary damage, yeah? Yes, then we can absolutely take a look at Ape. Let me just add that onto our list, which we'll try and cover in the next 30 minutes. Carlo, you missed the bird nest. Off over 1 month. Well, mate, please do feel free to come back at any point. And also, guys, we're at Web3 Berlin this coming weekend. All right, if anybody gets a chance to pop down, I just shared a post on Twitter, and we can get you in for free if you are from that neck of the woods. Just literally by, I think, just like sharing, quoting the tweet or something like that. But also there's going to be some really cool bits and pieces, and I'm sure we'll be doing some giveaways. So keep an eye on Twitter. If you can't attend, that can be a way to get yourself some great free access to the nest and see if it's a community for you. Luca, is this legit? Yeah, I hope so. I mean, it's totally up to you to make your mind up on that, bud. Most of these principles aren't unique to me. They're just things that I've studied and learned over the years in terms of price action. And I'm a professional trader. Trading's been my only source of income for sort of over 2.5 years now. I'm a senior analyst at the Bird Nest, which you can kind of check out. But in the same vein, I would with anyone, always suggest that you do your own research and don't just blindly follow anyone. Pick up some bits and pieces that I might be talking about today, and then really go away and test it. Yeah, make it your own and make sure it works. Don't take my word for it. Nip, good afternoon, my friend. What have you missed today? No, nothing we haven't covered before, Nip. Imran Khan as well. Great to see you, buddy. And Shanu, you are very, very welcome. I might even be Australian. Is it a Shano? Shano? Maybe. I remember that. Shane Warner, what a magnificent bowler he was. So, I'm not going to digress on this anymore. What I promised you was to look at this. Let me just clear this up. Drawn a lot of squiggles on there already, haven't we? Right, let's just get rid of those. We're back on a weekly, right? And let's look at the inside bar range. Irish, oh, you legend. Love Ireland. You got to check out Dominic James FX, man. That guy is not only just a sick trader, he's just got the best, most beautiful Irish voice I've ever heard. Like, you do real storyteller stuff, Funny enough, I spent a time rugby tour in Ireland, in Dublin, when I was younger, and I did some scuba diving off of Marlin Head when we were tagging basking sharks up there, and that was incredible. Beautiful country full of just awesome, awesome people. So, before I digress anymore, where are we at the moment? Yeah, so on a weekly scale, you do follow Dominic James. Yeah, honestly, guys, get on there. Follow Dominic James FX if you don't already. Just a total dude. Brilliant FX trader. Does touch on Bitcoin and that as well. Amazing swing trader. So, inside bar. Now, you can get an inside bar indicator. Yeah. So, let me take a look for you what this one is. I think it's just called inside bar, right? And all it does is it just highlights the inside bars for you on the chart. So when you're learning, you can kind of pop them out a lot easier. So the focus of our inside bar has been this one. Yeah, so the inside bar pattern is made up like this. First of all, you need the mother bar, and it's not valid until this second candle closes, right? The second candle has to close within the high and the low of the first candle. All right. So first things first, we create two ranges here, a range within a range. And this is a great way to start when you're looking to kind of build your range concepts, okay? So just quick basics for anybody that isn't familiar with trading the range. When we run a range higher, Yeah, so this is our range high here. We run a range high. Yeah, we get back within the range. Yeah, we're then looking to trade that to the far side of the range. Yeah, which would be here. However, we always want to respect the midline of any range. Yeah. So we would draw in the EQ, which would be here. All right. This will look a little bit clearer as we move this down on the lower time frames. All right. Ultimately, we didn't run this higher. Yeah. We ran the high of the inside bar and we ran the low of the inside bar. So what we're going to do is we're going to take our Fibonacci, we're going to put our 50% on here, and we're going to draw our midline for the inside bar. There. Okay. And then you can group all these drawings together. Obviously, a lot better than that. You can pop onto your object tree, double click, create a group of drawings, and you can put something like that, inside bar range weekly. Now, remember, you don't get this, right? Let me just lock that just in case we move it around. You don't get this until this candle's closed because it's got to be in there. Queenie, always with the roses. How are you doing, bud? I hope you are well. Lovely to have you on stream. Queenie, one of our real OG for the stream, listening to me waffle on for ages, bless her. So we're in here, right? Does that make sense to everyone? We've set the inside bar range, mother bar high, mother bar low. Yeah, inside bar low, inside bar high. Right? So I won't bother marking them up, but basically what you can do is when you do mark them up, create a list for yourself. Yeah. So that then when you go onto there, you're like, oh, okay, mother bar high. Yeah. Just for example. Now, let me get rid of that just so that isn't confusing with all the other bits not being on there. But does that make sense to everyone? Yeah? Perfect. Okay. If it doesn't, ask some questions, guys, because that is what I'm here for. And then you can go away, look into it yourselves and see, how these things can work. So the premise is if we run either any of these levels and then price comes back within that level, we're looking for lower time frame market structure shifts, and then we're looking to trade it to the far side of the range via the midline. Yeah. So should we have a look at how that's been on an hourly scale, first of all? So never be afraid to really kind of compress your charts up. This is something I learned from SC years ago when he was teaching sort of support and resistance and that. And, he's got an unbelievable read on it. Just the more that you kind of move this up, you can really see what I would call, for want of a better word, like the energy or the violence in the movement. Yeah. So it doesn't take a lot to look at this chart and just kind of say, whether you're doing it as a line or a box, whatever, but to just kind of say, look, that there, yeah, that area there, when we see it here, price comes in, rejected, price comes in, rejected, deviation, price steps underneath, retests this, ultimately sells off. So when price gets back there, what are we saying to ourselves? Well, we've got a really clear idea now. Price either comes and gets above this, yeah, comes above this, takes out this higher, yeah, and then we're looking for what? Price to get into a bullish market structure, in which case we can then look to go long. Ultimately, price breaks down here, comes into this order block. We've come into this point of rejection that we know about. We've set this low. We've come back up. We've now got that low there. We come back below it. We can then trade into it here. Ultimately, you'd look for it on a lower time frame, and maybe you don't get involved in this one because the drop is just so fierce. But that's the principle of what we're looking at. For some reason, TradingView does not want to get rid of the brush strokes today. Give me 1 second, guys. Just clean this up. All right. So same principle here. We're not coming up. We're not troubling this. Where's our range? Our inside bar range is here. So we've got 3 levels here. We've got our inside bar low, inside bar high, and then we've got the midline. Yeah. So Carlos, why the SEC accusing crypto we trade freely? Yeah, really good question. Also seems to be a really interesting point where there's similarities to the Coinbase situation, except now they're coming after SC very aggressively. I have my kind of theories on that. I'm not an over-truster in governments. Huge is probably the biggest manipulator of markets that exist. Nor do I think they have the very best people in there. So very often the brightest people are outside of those. Luca, what's your crypto trading mentor? So I've been very fortunate to have a few, my friend. I would credit a lot to Trader SC, a lot to ICT. I'm not an ICT purist, but I did learn a lot from him about execution, about fair value gaps, order blocks, right? And especially sort of things like displacement, right? Looking at how price moves through a level and kind of giving you an example of that. Well, I'm not saying it's the best example, but when we look here, price starts to build. So what we're looking for, remember, like we said, we've run a range low here. We're then looking for price to get back in this range. Yeah. Price breaks down here. We come down, we take out this low. Now, this is a little bit tight within here with this range. We probably look for. No, I didn't learn it. We're going to definitely move on to that, my friend. But what I'd be looking for here in terms of the same principles, right? So here, that's the low that was set for the breakdown. We didn't get a close below this. What did we do? We then started to build a bullish market structure. Yeah. So we get our low, higher, higher, low, higher, higher. This is where we've broken structure, right? Then when we've come in here and we've stepped into the range, we then confirm this is our deviation, right? Price is now back in the range. So what do? We're then looking in here. You can take this high, for example, price comes up, or even this higher, yeah? The price breaks out. Look at this move through it. Let me just move to this for a second. Price moves through, and this is what I mean by displacement. Look at the energy behind this move. What do we get here? We get a fair value gap. What does that allow us to do? It allows us to take entries here. We know where we're wrong, below this low, and ultimately we're looking to target liquidity above these highs, and then ultimately our range higher. All right. So see if I can delete some of these. I don't know why TradingView is being really weird today. I mean, it's done some kind of update, a bit annoying, but if you can have time, you're able to Sol. And Sol, there you go. So we've completed our set, right? So before I jabber on anymore, let's just move across. Everybody gets the range trading principles, right? We've got 20 minutes left. Let's see if we can smash out. Well, we'll take as long as it needs. I will cover CRV, Ape, and Sol, right? We're going to cover CRV first because that's what Craig was the first one in the chat to ask for. Then we're going to look at Ape for our friend Learning here, and then we're going to take a look at Sol for Nitpar. Yeah, so number one, CRV. Here we go. So we'll just do a top down on these guys, yeah? In terms of, we're just going to take a look. Let's clean the chart up. We're just going to go completely from a fresh chart. Let's have a look. Just call that beta. Beautiful. Right, so remember, like I said, we're going to start on the weekly, yeah? MVIS, not crypto, but I was seeing green. Well, you know what, Queenie? We're going to make an exception for you here, but do remind me, but we're also going to look at MVIS, yeah? What is that, a stock? Is it, mate? So, here we go. Let's have a look. So, CRV weekly. First of all, you can just see the punishment on this as it's coming down. Again, we would mark out our key levels. So we had this low here, price came out, deviated, reclaimed, broke structure. What is interesting about this, actually, let me just put this on rather than just rattling on. Here we go. So that level, right? Price came down, set this higher, ultimately broke that higher. Yeah. So see what I'm doing? Price came down, low, higher, higher, low. This was our market structure break. Yeah. We didn't retest this level. Now, however, we can see that we're coming into this. The other thing that I like to see on here, if I'm going to take my Fibonacci, if I'm looking at this as a premium discount range, I want to favor short positions from premium, which is the red 50%, yeah, and longs from the green, yeah. So on here, if I was saying to myself, where's the likelihood that we're going to see a reaction on a weekly scale, I'd be looking at this in terms of a fair value gap. Yeah. So price is now driving into this level. We've taken out liquidity below these lows. Something else that I like on here as well. I'm just going to clean this range up, guys. Something else I like on here. See how we've got these relative equal lows? Yeah. They're not quite, but we've still got liquidity below here. When we ran this low, we would expect a reaction back to the upside. Okay. Now we got a very small one, but ultimately we're still bearish. Yeah. high, low, lower, high, break of this low took us bearish. So what we're looking for is we're looking on a weekly scale for a recovery above this high. Yeah. And then what else I'm looking for here is I'm going to get rid of this high and I'm going to mark out our inside bar. Yeah. So again, we can see here, there's the high and there's the low of the mother bar. Here's our inside bar. Right, which we've run through. We can see now as price came up, let's drop ourselves down to a daily. Move this out a little bit. So we can see here, we set the inside bar here. What ultimately happened is we came up, deviated, got back under, retest here, and now we've sold off down to the range low. Yeah. Again, remember guys, we would be making an allowance here. Also for a midline. Yeah. So we just draw this in here. And when you test these concepts, just have a really good look at it, right? Because once you do that, you say to yourself, is that right? Is it wrong? Well, you can see here, even on a daily, when price gets above this, all these downside wicks, how well respected that is. Okay, we deviate this here, come back up probably into this order block before we flush. But now what we've done is we've taken out the mother bar low here. Yeah, we've now driven into this level of support. So for me, now wouldn't be the time to go short. Yeah, what would we look for in terms of being short? Remember, this is on a daily scan as well, guys, right? We'd want to see price come under here, look to retest that. Yeah. And then for your confirmation, you'd actually want to see something like this. Yeah. Price to come down, set a low below this. Yeah. Impulse move lower. You'd ideally want to see some kind of inefficiency in here, like a fair value gap. Price comes in, fills that, we look for our short positions, and then price sells off. At the moment, for me, this is a really key support area. So let's drop this down to, say, an hourly. And let's see what we've got on the hourly. So actually, this is quite interesting here, right? Because we can see price came down, took out these equal lows here. Yeah. So that's significant because we've run the liquidity here. What did we then do? We then came up high, low, lower, high, lower, low. We took out this, yeah, which was our structure break. Ultimately, when we closed above this, we got a nice retest of this, and then price pushed up higher. However, since doing that, we've come and set these highs here, which I don't actually think will run. But there's some real kind of equal highs, meaning that we expect there to be liquidity above those. Now, in here, what we can do in terms of managing a trade, we're here on the hourly. Now, price has come back down into this support level, right? Now, technically, right, we're high, higher low, higher high. This is setting a low, but this could still be a higher low in this move here, right? So what are we looking for? Just pop our Fibonacci over here for a second. We can see, first of all, that we're favoring long positions from here because we're down in the green, meaning we're in the bottom 50% of our premium discount range. But if we make this an actual Fibonacci as well, can you guys see how we held the golden pocket here? So in terms of looking to kind of build confidence, I think that's always something to be aware of. That's the 0.618 and the 0.66 level. So we're back below. We've now reacted here. We're starting to climb higher. So what could we see in terms of confirmation here? Well, something that can work quite nicely are fair value gaps. We can see this fair value gap here, right? Price drove into this. See how the bodies respected this, built on this, and then we look to move up. So if we want to apply something similar here, if we're looking to move lower, right, then we'd want to see some kind of bearish reaction in here. Yeah. See at the moment how the body of those candles is just respecting that fair value gap. We've ultimately, looking at the lower time frame as well, come up into this. What I would do is, if you've got a lot of fair value gaps, don't start getting paralyzed by them, right? Just label them up. We know that's a high time frame one. This is our low time frame one. So what would give us some conviction? Well, we've got these untapped highs here. See, stop losses above all these from people that were looking to short the market. So if we want to see bullish price action here, we want to see price above this, right? Hold this, and then we can look to move higher. Okay. However, if the opposite is true, if we start seeing a rejection here, bearing in mind, look, we can see that ultimately we're still bearish here, then we can look for the rejection within this area. Yeah, we see something like this, maybe swing fail that, and then we're just looking for the market structure break, yeah, to take us back down. And then that way, when we take out market structure here, we can look for a little pullback to get involved going short, knowing that we're wrong above here. Yeah. So let's say worst scenario, we go short here and the market doesn't want that. Okay. Ultimately, what the market does is we're looking for that move. Price goes up. Yeah, we see that. We get that retest. We go long, but price runs up and we're actually caught in a swing fan ourselves. We run this liquidity. Price then breaks back down, retests this. Yeah, to move lower. Well, no problem. Right, we were long here and we were wrong about that. However, the fact that we've now swept that liquidity and then we've broken down in here means it gives us our opportunity to look for that fair value gap in here or look for the retest of this line, the breakdown line, to then look to get short. What does that do? It gives us a little bit more conviction that the short trade is the one to take from here because price has tried to get back up here, ultimately swing failed it. Yeah, we've then broken back down. So our high probability trade then is back down to range low and ultimately the liquidity resting below this low. Okay, so that's how we take it from a higher time frame and we decant that down onto the lower time frame. So let's take a look at I hope that was clear, by the way, for CRV, Craig. If not, mate, reach out to me and let's have a chat about it on Twitter or at the Nest. And then we were looking at Ape, weren't we? You're very welcome, buddy. Okay, here we are. So we can see what we were discussing here, very similar kind of scenarios. We can even see here we ultimately break up, same principles, right? We drop down to a lower time frame, we set this high, we did not get the break and hold above. So again, when we're back below the key levels, we're then favouring short positions, all right? So it's no different. Coming to these equal lows, we got the run, we got a hammer candle, we trade price higher, ultimately up into this, price purges back down, all right? So we're looking at this just as simple liquidity games. Remember, you don't want to be tied to a bias, right? Like with that, if I'm wrong, then I'm wrong. It just means that there's probably more conviction in price going the other way. So Apes obviously had a bit of a run. We kind of took out this level here. Back into that level there. Really, I think that's the liquidity to the low. Liquidity to the high. We've kind of got this, I think, like an interim high. I think that's ultimately where we are there. Now, on a weekly scale, for me, what's kind of containing price here? So this is another way that we can look at ranges on a higher time frame. Is there a real standout candle or standout candles that are really kind of embodying this at the moment, like this big candle here? Yeah. So if we take this, now it's not an inside bar pattern because this secondary candle went below its low. But if we look at this, and we line that up with that low there, you see how price comes up, claims the midline, deviates, gets back above, expansion. Then what do we get? Deviation of the range highs. Where to? Into the liquidity resting here. Price ultimately gets back below, which we see here, closes below, retests, down to the midline, right? We see the reaction off the midline. We come back up, not quite to the highs, but again, come back, close below, and now we've ultimately dropped down and we've taken out the range low. So let me change this, guys, so this is a bit more visible. Okay, so I like that as a range, yeah? So now if we're going to drop this down to the daily and say to ourselves, okay, well, let's look how that worked within that. Because, guys, this data, it doesn't just mean that, well, because we were trading this back here, we can't learn from this now. We climb back in the range here, midline, mid almost to high. Ultimately, we tagged into this order block here, right? So let's just give that some validity for you guys. What does that look like? See these two up candles? Yeah. So there we go. Price comes in, retests it here, sells off. Comes back again, same reaction, sells off low. Now, We can also use the reverse of that, right? And we say to ourselves, well, where's the order block before the expansion higher, which was here? Yeah, so we can see this. All right. Take that to the body. Personally, I know people use the wicks on these candles. Where I'm using the upside wick on this is because we've got a fair value gap after it. See this gap? Yeah. That's where I'm most interested in those. Or if we have adjoining candles, if they're really small body candles, then I'll make an allowance. They have to be adjoining though, so consecutive, candles. And we see we get this little inefficiency, this fair value gap here. So you make an allowance for it wick to wick. If not, I typically favor the bodies. Now, see how we got this reaction here. Price sells off into this order block here. Price then sells up into this order block. See how this is forming a range. Notice how this, yeah, is within our high time frame range. Yeah. And then we can see here we have our midline, right? So high to low, low to high, high to mid, lose mid, retest mid to low, low to mid, reclaim mid, pushes up into the order block again, ultimately loses that straight through the midline. So our high probability is range low. Now, why have I drawn this order block in here? Because we can look at using order blocks as inverse order blocks, meaning that we can look for price to lose this. See this strong close that we get below? Yeah. What else do we do? Remember, like we said, we're looking for these key highs, key lows. What do we do here? That's the key low. That was capping the market to the downside. We get that nice close below it. Can everyone see the nice retest that we get in here? Price drops down. Now, we have the range low in our sights, yeah, down here. But let's say price action's just here, yeah? Well, what do we want to do then? Price has come in and set this low, yeah? So remember, we're still bearish. What are we looking for? We're looking for a point of interest that we can short from. So for me, these are order blocks. These are fair value gaps. They're untapped highs and lows. So price ultimately retraces into this FVG, yeah? We then break down from here. Well, we know we've got liquidity resting below here and ultimately the range low. All right, so that's how we would look to trade it. So let's move down now and look at recency. Obviously, it's easy to do this stuff with the power of hindsight. What are we looking at the moment? So, well, currently, and let's just draw in our mid. Right, see how beautifully this midline worked? Actually, if I bring this back here a little bit. Perfect. See, support, breakthrough, retest, right? Deviation. What do we do here? Remember, same principles, right? If we're looking for breakdown, there's our low, right? Or this low here would have also been acceptable. But we're looking for that. Price breaks down, comes back to retest in here, didn't take out this liquidity. We have all these levels of liquidity lower. That allows us to get on board, right? What do we then do? Well, we can use the same principles to manage the trade on the way down. So we're looking for order blocks. Yeah. So look, the up candles before price takes out the low, we want to see that defend. Yeah. So these order blocks here, for example, do they defend? Do those in our order block color so it doesn't get confusing. It absolutely does. Yeah. So then price comes back up into here. Okay. Do we have another order block? We absolutely do. We allow for all the wicks on this one. Why? Because of the fair value gap afterwards. Price retraces into here. You'll notice even though we start making higher highs, higher lows, we don't want to jump in and start getting bullish here because we still have these key resistance, right? And we can see how they even play a part back here. Yeah. Comes back into it here, sells off again. But ultimately, look at the difference in reaction. Price comes in here, breaks down, takes out this low. Yeah. High, lower low, lower high. We then break down from here. This is what gives us the conviction to go short. However, when we get into here, we can see a slightly different reaction. Yeah. Now here, same as we had with our bearish order, with our bearish fair value gap here, right? We have this bearish fair value gap here. So we want to see that hold when price comes back to here for more downside. It doesn't. See how price slices through it, then treats it as support. So then we shoot up. Well, what do we then do? We leave this fair value gap. Yeah, price comes in, holds here. See how it's failing to get below. Ultimately deviates above here, comes back down, takes the liquidity below these lows, right? So remember what I said, we're taking these lows. Do we get conviction? Do we get that breakdown and retest? No. Price comes up, ultimately takes out this high, yeah, the high that swept the low, and we can enter there, yeah, looking for price to push higher if our conviction, or we wait for a close above the order block, right? That's what we're looking for. So now if we overlay that with where we currently are, we can see straight away on the hourly, price is getting support from this fair value gap, yeah? This FVG, price has broken up, yeah? Now it's come back down, taken out this low and retraced all the way to here. What's our kind of threat, for want of a better term here, is this fair value gap that rejected price previously. Yeah, see how we left that, price tested into this and sold off. Now we're ultimately holding this position here. So what I'd want to see is this order block flipped and then price to start hunting liquidity above here. So by that, I want to see a strong move through here and then a retest of this. Then I'll drop down onto, say, a 5-minute chart. And what I'm looking for on the 5-minute chart is that break of market structure. And then I'm looking to go long, first of all, into liquidity resting above those highs. And here, I'll then monitor that ultimately with a target of range high. Okay. So that's what I'd be looking for at the moment on that one. Burned! I didn't see you. Sneak in. Exactly. When do we stream without you? You've got to send me a heads up, man. We can hold off for you. Super Shogun, my friend. Haven't seen you on here for a little while. Very, very kind of you, mate. Very kind. So for me on Ape, I'd be looking for this, right? What happens if we come up to here and this is wrong? Yeah, and we've broken structure, we've moved up, and then we come back down below here, and price goes, no, thank you. I'm not interested in that one bit. We get the reclaim, well, then what do? We look for our break of market structure down here into those lows and ultimately the range low. We cut our 1R loss. Yeah, if we start to break back down, we say, fair enough. We've taken our medicine from the market and then we're looking to break back down. All right. So we can always have two plans. Price is typically searching out liquidity. Nemesis, hey, buddy. Queenie, smash the likes. Yeah, please, guys, if you can. It really is appreciated. Just smash the likes if you like the content. If you don't feel compelled or don't feel like you have to. But it does really help on YouTube in terms of the algorithm. Thank you, Queenie. Your time is worth the money. Thank you, Carlo. You're very welcome. And yeah, a big shout out to the Bird Nest as well. Guys, if any of you do want to come and trade or see what we're about, you can get free trials in the description below. You can get the trading team calls. I think we've started this month incredibly strongly, actually. I think we're about 76% win rate at the moment. Now, we're profitable at levels above sort of the late 30s, early 40%, right? Combination of different traders, trading styles. So come and check us out. Like I say, also keep an eye on Berlin, guys, because I know there's going to be some really sweet offers going around. So for Ape, I really hope that's been helpful, mate. That's what I'd be looking for at the moment. We can see we're starting to get this expansion right now. We will take a very quick look at the markets as well to see what this kind of risk profile is as well. Also, for our good friend Nick Parr, we want to take a look at what was it? Solana, wasn't it? Let's have a look at Sol, mate. And then we're going to just take a quick look for our friends as well. Liked and subbed. Thank you very much, FR33 Will. That's much appreciated, my friend. Smashed. Awesome. Thank you, guys. Thank you. Okay, so we're going to run slightly over the hour like we do pretty much every week. I know I do ramble on. Let's take a look at Sol. And then we're going to take a look at MVIS for our dear friend Queenie, right? So, and then, guys, if you do have anything else in the future, like you can always hit me up with those. And we'll take a look at those next week as well. Let's just call that data again. Right, so nice clean chart here on the weekly. We start to see straight away there's a really standout thing for me here, right? First of all, this level, which I really, really like. Something capped the market there, right, the downside. So do you see what I mean? There was a big reaction here. That reaction there, let's see what happens. When we really break below that, what happens? We come back. This really stands out to me, this weekly FVG. Yeah, we can see that that's suppressing price at the moment. That's keeping price down. On the flip side, we can see how this fair value gap here has added nice support for price. Yeah. So what did we do? We set the low, come and set this high, higher low. What did we do here? Market structure becomes bullish. We get a big expansion higher. Price comes back down into this area. That's where we look for our long trades, right? We look for those long trades targeting liquidity above. Ultimately, we fell a little bit short of this liquidity. That would have been my liquidity target here for sure. We just do that on a dotted line so it doesn't stand out too much. So where's our liquidity resting to the downside? Well, we've ultimately, in terms of localized liquidity, we've got this here, and we've also got this here, right? So if we're looking with that in mind, can we see something that might be kind of containing price here? We're looking for, say, like our inside bars. And if you're looking for that, what I would say is if you're struggling with that, look for something that's capping the market. Like, obviously, we're within the range of this. Yeah, there's no question of a doubt here. But we've not had any interaction with the kind of high and low of this. Yeah, which is my only concern. You know, you want to see these kind of extremities engaged with, which we haven't in this respect. So come back down into this level. We're holding this level on the weekly. If we're looking for a weekly range, then notice how we've got all these wicks to the upside here, and the market's also being capped here. I'm going to get rid of that to clean it up. Also get rid of that. And I'm going to say to myself, okay, where's the candle that's capping price here? I think it's this one. Right? Now, why do I think it's this one? And I would have thought it's this one all the way back here as well. Because notice the high and low. Deviation, price gets back in. Where does it go? Far side of the range. Deviation, price steps back in. Where does it ultimately go? Far side of the range. So now, AN, where is the volume? I can pop volume on for you, mate. I just very often leave these off on the chart until I'm looking to kind of an executable time frame. But one cool thing you can do with volume like this is when you see these big spikes, doesn't matter if it's bullish or bearish, if you see that sweeping a key low, that can often be a sign that you're getting a reversal. Same as this, right? You get a big spike here, price ultimately then starts to move higher. But yeah, no, you're right. Volume's really important. If you want to follow some people that are amazing with volume, someone like Bast Trader or Resume, who are really exceptional with that. So we've got our liquidity lower down, we've got our liquidity higher up. What else are we looking for on a range? We want to pop in our midline, right? So let's pop that in very quickly. Right, so for me, we've got our range here now. Yeah. So when we go down the time frame, we can look and we can take that on board. What happened? Range higher taken, sells off to the low. Yeah, deviation, price steps back in, sells up. Yeah, I suppose that is the right term, but goes up, rejected at the midline, back down to range low. Yeah, we ultimately then hold the range low. See how price just wants to, it just can't go back below that, right? Again, we can see the fair value gap that's drawn price down. We rebalance that. Price then ultimately moves up. See the close above the level, retest the level up to the high. What do we get here? Deviates the high, shifts market structure here. Price breaks down. Price ultimately then loses the mid. But what happens when it reclaims the mid here? Close above it. We want to look at this area. On the lower time frames, our confirmation would be a reclaim of this to push up to range higher. Ultimately, we don't. We get the rejection. So we look to play shorts. We then retest this, the EQ, which confirms we can then add to our position there. And we're then looking for range low. For me, I'm then out here at range low. Now what I'm asking myself is, based on those same principles, right? What have we got here? Is this our deviation? Yeah. So this is the higher. What happens here? Price steps back in. Deviation, impulse move, back into the range. We're now back within the range. So what are we looking to target? We can day trade this. Where to? First of all, the clear and obvious liquidity. Yeah. And I think I really should say that a lot more in terms of clear and obvious, because yes, you've got that internal liquidity there. There's a swing high there. But ultimately, if I was a big player looking to be short here, where would my stops go? Above here. That's where I know my risk is. Yeah. So what happens? We swing fail this. Now we're starting to break down. Okay, so on a daily scale, what's our point of interest here? The fair value gap. Yeah. So price holding below this, you'd want to see this retested. Ultimately, if it retests this on the lower time frame, starts to break down, we assume we're going to take out liquidity below these lows and below this low. However, if we do the opposite, we reclaim this, retest it, and down to the lower time frames again, find our market structure shift. and then our first target becomes the midline. All right. There's no value in shorting this down here, in my opinion, because we're straight at support. Price could have run up here to flush out, shorters here, just purely to flush them back out, take liquidity below these lows, and then recover. Right. Often these things are very much liquidity gains. So if we now drop this down, get rid of that because that'll look a bit ridiculous. Yeah. This gives us a little bit more context. So what do we now want to see? We start marking up where our liquidity is resting. Now, if we start dropping back out of this range on the hourly, we can see at the moment exactly the same principle as we were discussing on the daily. Price is breaking down. We can use this fair value gap to start monitoring. If price comes above it, starts to hold it and looks to shift higher in market structure, boom, we can move higher. Ultimately, if price comes down here, what do we want to see, right? We want to see price holding below these levels, yeah? I'd actually quite like to see the liquidity run there, price come back into here, struggle to get here, and then when we break that market structure, we've got a clear target here. If we ultimately do the same, we can then look to move it lower. Yeah, where are you wrong? Well, once you have this breakdown here and your entry in here, you're either wrong above here, or you have to be wrong above the price swing, which would be that in that instance. All right. So I hope that's helpful on Sol. Knit. Quick question here from Knit. Would you use the last two candles as a mother bar and inside bar on the daily? Oh, that's a great question. Let's have a look. Yeah, good mate. Yeah, absolutely brilliant spot there, mate. You absolutely would. So you would have your. So as Knit has just pointed out for everyone, right? This is a brilliant inside bar here. Yeah, and what's great about this as well that we'll look into in a second is how we haven't run that. Now, it doesn't matter, right, whether the high, the low, let's draw that across. Now, if you have the inside bar high or low really, really close to the mother bar low, then basically you're just kind of monitoring both, And what we've got here, thanks to Knit's very sharp eyes, and you know what, I'm just going to, no, I'll leave that, right? So now let's look at this for confluence, right? Fine, this is a weekly level here. We've run this, we've come back and we've run it again. That's normally a little bit of a sign of weakness in truth. However, we've now got the confluence of these two untapped lows, So the one of this, but this is the current candle, However, so let's just delete that for a second. Sorry, I meant the last one and the one before that, sorry. Which one? So this one, Knit. Yeah, that's absolutely an inside bar as well. And let's look at this on this level. We'll just draw these in quickly. Because then we can just quickly look at the mother bar on this and this, Drop down to our lower time frame, just say an hourly, just to prove to you all that I'm not just talking absolute mumbo jumbo, or maybe I am. Maybe I am, but hopefully not. Right, this was the mother bar high and low. What happened here? We had a strong breakout. So what do we say? If we have a strong breakout, we want to see this level broken. This is the high of the breakout. We see that gets broken here, and we're trading it higher, and then we're looking for clean liquidity targets over on the left. Ultimately, price breaks down, You got it first time. No, you're absolutely right, mate. He said you got it first time, right? No, you're absolutely right, mate. Because this is an inside bar as well, and actually, I really love picking out the less obvious ones, right? Because it's all well and good to look at the ones where it looks like it's really clean, but actually, this one is a really, really good example. Because look, this ends up being a big deviation, right? So then, when we step back in the range here, this was a tricky one because it was just such a nuke. But ultimately, we're then looking to the range low to hold, What happens? See, we set this, we don't close below that. Ultimately, price is just chopping around here. It then gets back in the range, no problem. Why? Because look, we set this high. Do we break above the higher? No, we don't. So if we're bullish here, that's the high that we're looking to break above. Because we've broken here, we want to see price hold, regain market structure, boom. We've got a clear upside target. Ultimately, what gives us the conviction to go short here is price sets this. What does this become? A deviation. What does this happen? This closes below, And then ultimately we can look for our short setups in here, targeting first of all the weekly low, but ultimately our target would be down here, So then when we're looking at this here, we can look at it on, say, a lower time frame. Now from here, we're just saying to ourselves, right, where's our conviction? For me, my conviction, if we come back above here, this high that we set when we tried to break out, hold that, then look for that market structure. We get that, boom, right? We want to be aware of these highs here and here, but ultimately our long play is then to the upside. However, what's going on at the moment is we've come back up here. We're now being held below this. I would then probably tentatively be saying, okay, below these lows here, if we start to come down to look to short. However, we're coming back in to the weekly support level there. So I probably want to see more of a confirmed breakdown below this low. Yeah, for the price to do something like this and say, okay, we've now discounted the weekly low. We've come into this level. We've now taken out this. We're struggling to get back above it. We hold below it. That shift in structure, and we can target lower prices. All right, guys. So I hope that's been clear on that. I know we're a few minutes only. I did promise Queenie that we would look at MVIS. So let's have a very quick look at that, guys. Let's have a look, Queenie. You did very kindly clarify this for me earlier, didn't we? LiDAR sensor and okay, MVIS, LiDAR sensor and augmented reality. Oh, okay, that sounds really interesting. I'm guessing it's this one, is it? The AG? Maybe the MVIS AG, augmented reality. Could be that one. Let's see if Queenie's got anything. Oh, you're welcome, bud. Well, let's just take a quick look at this anyway. Queenie, please do let me know if I'm wrong on this. Let's add it on this one. Doesn't hurt to look. No, that's not the right chart, is it? First one. Perfect. Well done, Queenie. MVIS. This one, yeah? On the NASDAQ. That makes a lot more sense. Here we go. So, all right, let's take a look at this. I've never traded this before. It's really cool. Wow, so this thing has really had a pump, hasn't it? Maybe, I'm not sure what you said, augmented reality and stuff, maybe off the back of the Apple announcements. Also, obviously, we could be looking at some other bits and pieces in there as well. You know, obviously, AI stuff's has been doing well too. So, okie doke, on a weekly scale, what are we looking at? Well, I would have definitely been looking at this level here, and we ran that here, so probably it's become subordinate to this. Really, really strong breakout above this level here. I mean, on a weekly scale, really, next resting liquidity is all the way up here. Strong moves like this can be quite difficult to get into, but let's always run our thought process here. There was our sweep of the low, right? That was the break of the high, forming our kind of base. Then we can see price really took off here, right? Even when we look at this level, can you see here how we got that nice close, that strong candle through it? Price came down, week opened. Yeah, we traded down, which is what we want to see. We're trading down into a discount, fill our long positions for price to go higher. Let's just make that a little bit less obtrusive. Now, I mean, really, what you want to do, you see these real strong breakouts. You don't always get it right. This is a good example here. Price has really started to drop here, took out a key low, which is then what made you have that corrective move higher. With something like this again, you'd really want to see. I think actually a really cool place to see hold would be this, right? This is obviously on a weekly scale. We'll kind of decant this down a little bit better. Now, something like this, there's no real clear and obvious thing that's kind of what I would say capping the market. Yeah, or sorry, a real kind of clear candle that's holding this. What I would then be looking for is a low that was capping the market. Yeah. So let's say this one, for example. And then let's take this. Now we see here, it's from the low to the high, deviates the low, deviates the high. Ultimately, what happens here? A little bit messy down here. We get the deviation, price steps in, sells up into this area here, probably this order block. Fine, we get the rejection. Price comes back down again, but sets this low. Yeah. See how we don't get the conviction below that low. Yeah. If we started to get conviction below there, candle close, look for the retest, look to short it back down, right? But also, we need to remember that before this huge, expensive move higher, oh, help if I take the right thing. We're in the realms of this order block, right? So again, for price to push lower, you'd want to see things like this really lost, retested, and then to purge, in which case you can look at liquidity lower down there. So ultimately, at the moment, we're between this level and this level. Yeah, we'll draw our 50% line in here in case that becomes useful. Right, and now we're going to drop down to a daily. Now, all of a sudden on the daily, hey, just a dad, my tea drinking brother. It is good to see you, my friend. Sorry, another big long session today. Lots to work through if you've got the time and patience to listen to it. If you do have any questions, please don't hesitate to get in touch, mate. So we've drawn that out on the weekly, right? Now we move on to the daily. Notice how on the weekly it didn't really look like it had really much going on, did it? It's midline. We've just drawn it in and you think, yeah, okay, a little interaction with it here and here. But actually, if we go down to this, yeah, midline, we can see here, look, rejection, yeah, so resistance. Look at that strong close through it. Retest this area, sells up. What happens here? Comes down, loses it, tries to regain it. Not closed above that, have we? What are we looking for? Below the breakdown line, yeah? In the same way that when we traded this as well, look, that's the level that came back above it, right? We might not have got the close, but that's the level you want to see price really move through, yeah? So when we marked that, we came down to this level, fine. Are we going to get back above this? If we got back above that, that's the platform, yeah? And then we look to long from there to this liquidity to this, all right? That's all we're looking to do. Now, ultimately, when we had this deviation here, yeah, look, deviation, price comes back up. What happens? Like we said, we're looking for these levels. Price came into that, didn't close above it, right? Came back below, ultimately took out that liquidity, but didn't have a strong close below it. Price is just trapped. We sit on our hands, right? When price does do that, strong close above, we look to see if we can get involved. If price moves too fast, it moves too fast. We don't worry about it, yeah? This is a better example because we came and we set this high, price broke down, swept liquidity, built back up, climbed back in the range. We get the close above, we get the retest. That's when we can look to go long, right? Because then from here, we can drop this down onto our lower time frames where it makes even more sense. We're just going through this stage by stage. Checking in, ABC. No problem at all, my friend. No problem at all. We're just rolling for about an hour and 20 at the moment, so just trying to shut this one up. But there's going to be loads on recording, guys. If you've got any questions, do let me know. So again, look, wait for our confirmation. This was our line. We wanted to see price get above. What do we get? Price comes up, see it hold, big bullish engulfing candle. You can even get involved on that if you want, or you can break down to a lower time frame even from here. Yeah. Let's say you go down to a 15-minute or a 5-minute time frame, right? And then you're just looking for that structure. What do you get? You get price at that breaker. You don't buy on that. You get the retest. There's the higher. There's the low. There's the higher. Higher, low. What do you get? You're looking for a nice break, right? Yeah. Holds above. You can then look to enter on there or on this engulfing. It depends really what your entry technique is, guys, but that's how I would look to trade that. So just very quickly. Hey, my man. Good to see you. Good to see you. Hope life's treating you well. So for here, if I want to see this hold, right, I've got this fair value gap here on the hourly. All right. So price coming back down into this, yeah. Rebalancing this, holding this level here, showing us that it really has got some grit to it. Bullish market structure. And we're away looking for higher prices, all right, from that kind of level there. All right, guys. Ultimately, the reverse is true. If we really knife through this, yeah, so price comes and just goes, no, thank you at all. Comes back into this, is really struggling to hold this level. We get something like this. We look for our breakdown, and then we trade it to the mid, and then back down to the low. Yeah, but just, as we talked about earlier, patience can just be really, really key in trading. All right, guys. Nemesis, would you trade Mana and Sand guys now, or too risky? So, Nemesis, what I'd advise with that, mate, is go onto like a weekly or a daily, like we've done today, and kind of mark those key levels out. If you see prices, really holding support and looks like it's got upside, where in your invalidation is on the low that you've just recovered. Then wait for that high when you've climbed back into a range, like we did here. Yeah, or let's just use this as an example. So we climb back into this range here. Yeah. Now here, we don't want to FOMO in here because this could be a deviation. We could come back down, retest that, and then be off. However, what we see is we break and hold above this. See these little candles? Another brilliant SZ statement from many years ago. Little body candles equal big body candles. Yeah. So you get an opportunity to get involved there, or you can play the breakout and the retrace to the fair value gap. The key thing is having the understanding of the high time frame that's drawing price. So we're using our ranges for that, and that way we're highlighting the midline. And you know what? I hope that's been useful, by the way, Queenie. So for me, that's what I'd be looking at. This thing is running incredibly hot, though. So it really wouldn't surprise me if this thing really took off. All right? You're very welcome, Queenie. And you as well, Nemesis. And Nitpar, what if MVIS didn't hit either fair value gap hourly one? Would you just wait or look for another trade? Yeah, absolutely. So for me, I'm kind of, let's add a little bit of context to this. There's not really a lot for me to go on here, right? We've kind of taken out these highs across here. We're coming into this. It's probably, if we look at that here, what would I look for a continuation play? Well, what's kind of suppressing the market here? I'm going to go out on a limb here, ignoring this candle here. Don't do this, right? The reason I'm ignoring it is because I'm pretty certain that would be, from here to here, would almost certainly represent a valid higher time frame order block. So this is the up move before we lost, and then we retested this, and price ultimately sold off. Yeah. So if we draw that out, always look left for confluence, guys. That would be a tip that was given to me years ago. So here, if you're looking for the breakout play, well, this order block should be rejecting price, which it did previously. Yeah. So if we now reclaim this, really strong move above it, I'd want to see a move back down into it, and then I'd want to see the same principle, right? I'd want to see price recovering here, showing us that it's willing to hold, ultimately taking out this higher. Ideally what you'd love to see is a little sweep, taking out some liquidity coming up. Not necessary. The key thing here is the market structure break, a little bit, of energy in this move here that breaks market structure. And then we're trading it up to here. What happens if we're wrong? Yeah, so that doesn't happen, right? We ultimately come down. Yeah, and price goes, no, thank you. I'm going to come back down below here. Yeah, no problem. What do? We wait. Look for the retest of this. Again, market structure break. And then we know we're here. We day trade it into this. And then ultimately, we're just using market structure to keep us in the trade, moving down to different liquidity levels. All right, guys. Look, I hope that's been helpful. I know I've rattled on for almost an hour and a half today. Sorry to anybody if you didn't get around to looking at the charts. Hopefully we covered most of it. We're going to go big next week. I'm not going to be here on Monday, or I will be. I'm going to be in Berlin. We've got the Web3 conference, so do keep an eye out for that, guys. It's going to be really cool. You might even get to see me running some live workshops out there and doing a bit of speaking on the panel show, which will be a first for me, actually, at one of these big kind of Web3 conferences. So I'm really looking forward to it. But yeah, thanks everyone. A load of you stuck here with the duration. You are an absolute legend. Nemesis, that sounds absolutely awesome to me. Burn, Nick, Queenie, God, Nit, obviously, AN as well, learning. Thank you very much for your contribution today as well. Super Shogun, great to see you on there. Craig, who's probably been called off to some work meeting, the poor bugger. Carlo, thank you very much as well. Lovely input today and really do appreciate that. Luca, again, thank you for your input. Shanu, legend, or Shano, Irish, loving it. Lord Tang, great to see you on there. Whack as well, my man. And I'm really, really sorry if I've missed anyone out. Fantastic seeing you all. Just a dad as well, my tea drinking brother. I will try and run a little something from over there if I can. If it's not possible, we'll do an epic session next Wednesday when I'm back. All right, guys. Have a fantastic week. Trade safe. I look forward to seeing you all around the nest.